Okay, looking at the market this morning, we have Euro USD printing bearish. We have the US dollar card seeming like it's about to go even more bullish on the 4 hours. We have the US dollar against the Japanese yen going bullish, like crazy bullish recently. And we have the British pound, well, also bearish, strongly bearish. And then we have the US dollar, Swiss franc, highly bearish, slightly going bullish recent days. So what are we looking at here basically? We're looking at the market where a lot of things are happening, and just judging from only the fundamental aspects of things, the New Zealand dollar against the US dollar still seems like a very good thing to trade, but this is just the fundamentals, right? Markets trading is way beyond just fundamentals. You need the fundamentals, you need the also technical aspects of things. And good times are when you find fundamentals lining up directly with the technical aspect of trading. My strategy remains supply and demand market structure, and I'm trying to see what's happening in the markets through a straight bird's eye view, fundamentally basically right now with this calculator right here. This is personally made. I'm not saying it is 100% accurate. I'm just saying this is my own way of seeing the markets, even through the entire situations fundamentally is all here. The COT data for the commercial traders is all of this, their biases. And then we have the retail traders, which is the contrarian signal. And looking at this place, it's telling me to go perfectly long on the US dollar Japanese yen simply because the retail traders are going extremely bearish. And then if we should go to the US dollar Japanese yen, you can see we have a good bullish day already printing up today. I don't even have to look too much at this chart. You can see today's chart, it is absolutely different. And with such situations, if you are a contrary trader, then you can follow such indications. The moment you see such things on that calculator, then go the opposite way. Introducing the trades I have currently running, I have the British pound, US dollar, and that's the only, that was the euro against the US dollar. That's the only trade I have currently running, and it seems it's running in good profit, which is nice. Let's see, I moved the stop loss all the way from here to structure. The game is to follow the market structure, and if the structure breaks, then you work out with whatever profit you manage to get. The moment the structure goes behind like this, I'm already out of the trade. So I'm following the structure. This is the 2-hour structure, and I'm hoping this low get wiped out without price taking out this high. Because if price takes out this high, then I'm out of the trade with roughly 3,000 naira profit. But if price takes out this low, then I can furthermore wait for a strong move, and then I'll move my stop loss further into profit. We're all just aiming for this level, because this level to me is a key area. What do I mean by a key area? So if we go down to the daily time frame, I'm going to hide the Fibonacci just so you understand exactly how it goes. Okay, so we have a key level right here. This is a key demand zone on the daily. You can see that price made a little bit of, I call it, indecision on this day. This was on the 24th of January. And then we have another key level, which is where I am really aiming for, basically. So this is just to aim for the first key level. By the time price is getting close to this point, I'll take out about 80% of the trade and then adjust all the way down here. You can see the full trade was supposed to be down here. My take profit is halfway through. And if you put that into the 4 hours, to put that into consideration, you can see that the key zone is right here. This is the key zone, while the key zone for this lower point is all down here. So I'm just looking at these two key zones. You can see my take profit is right at the exact key zone entrance. So let's see how this trade goes, see how it's going. Fine. For those who are wondering why I have so much lines on the chart, there's a zigzag indicator, and I've made a video. I'm going to put the link up here for you guys to see. The reason is because, again, I like to explain this thing a lot, but I think you can't just stop iterating something that is factual in the market. So the reason is because of this. We all know structure goes like this. we all know have higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. That's for uptrends. And then lower lows, lower high, lower lows, lower high, lower lows, lower high. Now this is the normal structure on the higher time frame, in the lower time frame. And then let's say let's make the bullish structure that leads to that place. So we have higher highs, higher lows, higher highs, higher lows that led to this lower lows and lower highs. Now on the lower time frame, obviously this is what you will see as market structure, but on the higher time frame, you'll be surprised that this whole thing is just price going up like this and price coming down on the higher time frame. And then you find your break of structure on the higher time frame. And then when you look into the lower time frame, you end up seeing that there's always higher highs, higher lows also within that time frame. So that is what we're just doing. We're simply trying to capitalize on these smaller trends inside the big trends the market is giving us. So again, that is trading market structure. And then we're trading that push, those moves using supply and demand zones. Some people use fair value gaps, imbalance, ICT calls them order blocks and the rest. But so you can see I have this small uptrends here, this small uptrend here. So and then I start seeing this downtrend. So the moment I see this first break below and then another break below, I know, okay, I think we should start trading for zones within this area. And then the Fibonacci again is simply, let's get the Fibonacci to retracement back. So the Fibonacci retracement is simply understanding that premiums and discount zones, right? Premium and discount zones is what the Fibonacci is meant for. We're trying to see areas where price is cheap, areas where price is expensive without having to stress ourselves too much. So below this 50%, price becomes cheap. So there's a high tendency below this 50%. Whatever you find, whatever demand zone you find below this 50% is most likely going to have lots and lots of buyers coming in. Hence, you want to be careful. And that's why we have the first take profit right here. And then the original take profit is now trailing. We'll just trail it all the way down to this point. Nevertheless, this is all for the British pound US dollar. Sorry, the euro against the US dollar. Let's go to the euro against the Swiss franc and let's check on this statement. What does it say the euro against the Swiss franc is going to be like? We're looking for all euros, so I'm going to just filter all the base currencies on euros and against the Swiss franc. So here we can see we have a slightly bullish move, but we can see that the commercial traders are all going bearish on this situation, and then the retail traders are all betting bullish also. And then if you also look, one thing you can use to save yourself a lot is by looking at your traders, your brokers analysis. And you can see in this market, most of the traders here are highly bullish in this market. So in this is from my own broker. I don't know if they're picking this information from all over the world, but the amounts of trades that recently came in, recently opened trades, are mostly bullish trades and then very little short trades. Hence, if there are retail traders more in this market, then obviously you should be shorting this market. But if there are more institutional traders in this market, then you should be longing this market. But how do you know from that place? You can't. All you can do is look at the market, analyze it the way you know how to analyze the market, and make your trades. So let's just do exactly that. Instead of me having to draw market structure over and over again, just like I said, I use the ZigZag indicator. I use two ZigZag indicators. One to show me the higher time frame structure, the other to show me the lower time frame structure. Immediately, I'll get a clear perspective of what I'm doing. So currently, I see higher time frame structure is telling me, bearish. And looking at this market, I can't even trade here yet. Why? Because it's simple. So price has been making good lower lows, lower highs, lower low, lower highs. They did a partial turtle soup, almost a turtle soup here, went down, came up. They didn't even come up all the way to the premium zone in this place, but they ended up pushing further down. So looking at this place, I only have opportunity. You can see where I have my opportunity right here. I'm taking, okay, if this leg is, if this price move is certain, is cool, I'm already seeing price make some sort of retracement, and this is the 50%. So above this place, do I have demand zone? Do I have supply zones? Sorry, it's supposed to be supply. And over here, we can see that the only supply zone we have is this, which is literally sitting at the 50%. And I'm looking at this like a very scary zone. There are other zones here, but they have been utilized. For example, take a look at this one, which was clearly utilized right here, utilized on 19th. We also have this very huge one, though I won't call this a good zone. Forget the fact that it has like big candles. I won't call it a huge zone. Instead, I'm looking at its source, which is on this day. So on 19th of May, it started a source, which ended up being utilized on 28th of May and 29th of May to create a strong push downwards, creating this new structure we're looking at. So what are we going to hope for? We're hoping for substructure occurring on the lower time frame. And to get substructure, what we just do is we reduce the deviation, that is the percentage deviation, and also reduce the depth. And then we go into those lower time frames to see, okay, are we getting those requests? Are we getting change of structure on the lower time frame? Do we see any reason to hope for a good market? Going to the 2 hours, I can see a good change of structure, and on the 1 hour, there is no clear change of structure here, except if we then start to make this like really smaller. But based on my strategy, making this too small is dangerous. So therefore, I don't see a trade here yet. I'm not seeing clear higher highs, higher lows here on this lower time frame. Though some people would say they see it because they are seeing lows like this holding. You can see this low is holding, and you can see this high is being mitigated consecutively. But one thing you need to also observe is this high is not broken. It has to be broken for us to start to see this as reasonable, and then the structure will simply just become from here to here to this low, because this low obviously looks lower than this other low. So it will be to this low and then to whatever high that broke it. So we'll start looking for retracements, trade all the way back here. If this scenario plays out, that's what we'll be doing. But for now, there is no clear scenario except for this opportunity to short the markets way up here. So let's just watch and see how the market reacts to all of that. So this is all for today. I don't have any other thing to say regarding the rest markets yet because I cannot analyze the rest markets this morning and I need to be in the office. So see you guys later in the day. Peace and safe trading to you all.